and we talked of financial forex markets. So now we are dealing with forex markets, and we are saying it is the largest liquid financial market in the world. So it is the largest among the three. Traders include large banks, currency speculators, corporates, governments, and other financial institutions. The average daily volume in the global foreign exchange and related market is continuously growing, and the daily turnover has been reported to be over US $7.5 trillion as of April 2022 by the Bank for International Settlements. Of the daily global turnover, trading in London accounts for 34% of the total transactions in a day. So London is by far the global center for foreign exchange. In second and third places, of course, we have New York at 16% and the Asia at 6%. Yes, so that is for the size and liquidity in the market. We've seen London is the largest liquidity provider. Then we've seen the US follows second, which is also called the New York. And then we have the Asia following third. So I would like us to look at something here. I want us to look at the composition, the market participants. You know, like we have different participants in the Forex market. It's also called the FX. And we have, of course, the banks. We have banks here, which are also called commercial banks, or they are also called the dealers. You'll hear this very much. Anytime you hear in the Forex market they talk about dealers, they are talking about the banks because they really move the market. They have the biggest liquidity. We have on this side, we have the government. We're talking of the government in each country. We also have international agencies or NGOs. Now, how does NGO participate in this? NGO will participate in this through implementation of projects in foreign countries. For instance, if let's say you have let's say you're in Kenya and you have an NGO that wants to implement a water project. So the money flows in, the funds flow in let's say American dollars, USDs, and they've got to convert them to spend them in the country and start implementing the projects. They've got to convert that money into Kenya shillings. So obviously that is a big chunk of forex exchange that is going to take place against the Kenya shilling. If it's in Uganda, we're talking of Uganda shilling, UGX, you know, depending on the country, then the foreign exchange will happen over there. That's for NGOs. And also remember, also workers have got to be paid. They have to be paid in the local currency. So the foreign currency has got to be exchanged into the local currency. We also have commercial companies. Commercial, like for instance, we're talking of Safaricom or Kenya Airways, KQ. You know, they want to import a plane, they've got to exchange the local currency in, let's say, to the dollars. If they're going to import the Boeing 737 or something like that, they need to purchase it in dollars from the source, because the source understands profit according to its currency. So hence the forex exchange has got to happen here. Then you've got individuals, of course. Here we're talking of retailers like you and me. Retailers, this is where you're going to fall in, and you'll be doing your businesses here. We also have some other people here, or players called brokers. Now, we're going to cover this later, but basically a broker is the intermediary between the retailer and the FX market over here. So the FX market is interfaced to the individual by the broker. Now, everybody here has a role to play. Apart, banks will deal as themselves. And there is something called interbank, whereby banks work, exchange, do transactions among themselves. Happens a lot overnight. In government, we have two parts of it. There is the government itself, and there is the central bank. Central bank. And we are talking of central bank in every country. Whichever country it is, there has got to be a central bank. So we have central banks and we have governments. All these are key players. And there's, I think, one more. There's one more here. Not really a bank, but it's called hedge fund. Yeah, hedge funds are people who pull in a lot of money into the market for speculation, yeah, or for protecting importers and exporters against any currency fluctuation during the transaction, because some export, actually most export and imports can take days depending on the country where they're coming from. So they hedge against that loss for the commercial company that is involving itself or indulging itself in that export or import business. So this is it. This is it for the players. You can see there are quite a number of players, and we shall be looking at some of them. You know, like we shall be seeing how some of them come and intervene in the market. As we go along, we shall be seeing that the purpose of banks will provide liquidity, and you've just seen that London is the biggest of all, followed by New York, and then the Asia. Yeah, so that's it. And another thing to remember, please, guys, this business has a major edge that other businesses don't have, because you only need a laptop, internet, and a startup capital. You can start with as little as even $50. Okay, guys, so hope everyone is enjoying the lesson, and so viewers, once more we come to the end of this lesson, and thank you for taking your time to watch our videos. And as always, we promise to take you through a good Forex journey to profitability. Keep following us, and as usual, if you have not subscribed, please hit the subscribe and the bell buttons so we can make more videos like this for you. And if you have any comments, please feel free to send us your comments. We're always delighted to give you feedback, and thank you.